This is Friday, March 27th, 2026. Current time is about 6:24 in the p.m. Eastern Standard Time. Most of the markets today did not perform well at all. Mostly. Let me go out further. This is what I have for Bitcoin for Tuesday for potential bounce point is right here. On a 5-minute chart, as soon as you get confirmation above 10 moving average, technically you can be in a long position there. So Bitcoin did exceptionally well. I don't know about this one on NASDAQ. I have to get to another one. It's at some either 161.8% level or it's at, for what I mapped off Tuesday, it's at its 127.1% level. It went to it precisely today. That doesn't mean it's going to bounce there. That's like the equivalent of -4 deviation is what that is. Let me double check this. Yeah, that's from Tuesday's level. From Monday's level, it bounced off that perfectly. Monday's 127.1% level, though, it never did even attempt to make any support out of that, at least on a 30-minute time frame. But at the end of the day, it's difficult because this is real similar to what happened, I don't know, 2 weeks ago or something like that on a Friday, where it's like at a, -4 deviation, basically, where, on a statistical basis, and I mean, it's below the bottom of average daily range. You're all below on a statistical and technical basis where you're supposed to be at. Typically, if you're below that, then at some point it's going to bounce. If no, major crap pops off over the weekend, then that will make some support. Or if there's no bad news, I guess, per se, then this will for sure make some support. Or at least it's highly statistical probable that it will. NVIDIA, what I mapped off on Monday, that's the level on a 30-minute time frame. It never does show up as being a potential bounce. Yes, again, you're at the higher level, it went up to there and did exactly, or pretty much, there's two levels that lined up there. There was a previous top of average daily range and this top of average daily range. They both coincided. It just so happens that two levels lined up there. As soon as that typically happens, you'll get some form of pullback. Usually my range that I would actually aim for would be the statistical mean, this level here. On here, it never did show up as being bullish at all. It tried to, couldn't break above the ATR trend stop. That's a big level that, if it's in a downtrend, let's stay in that trend, and that will reject from that level. Again, you're below where you're technically supposed to be on NVIDIA. What's weird is dang on AMD. AMD is not dropping like at all. Like it's staying within freaking like the last earnings that I had. I don't get it. Why can't it drop to 180? That's strange to me. Anyway, that's a good or a better, for me, statistical level to possibly buy into AMD at. Russell, what it did on Monday was almost perfect. Not quite bad, but it again, like, what I typically model out, especially first attempt, it's a better time to potentially look at it. And again, like what I'll be looking at would be this statistical mean level here. But then Tuesday, my levels changed. Top of the average daily range was also here for the Russell. That kept on, it stayed range bound right there. Typically, if it can't break above and use that as support, then that means that it will not. It will come down. And right now it's at the bottom of the average daily range. So that's actually, another bounce level that statisticians and market participants and algorithms look for to potentially buy into at that time. So far we got Nvidia's below Nasdaq. I can't remember about Bitcoin. I just looked at it. For the Dow, it went up to 127.1% level from what I model out. That kept on making resistance. It never could get into the top of the average daily range. So I think that's range bound also, like Russell was. Russell was into the top of the average daily range. For what I modeled out though, it's really damn close to it. Like it don't have much more it can come down. And that's still like -3 deviation. It can come down further, don't get me wrong. That's the level to look at that time, 45.074. If it starts to become looking bullish at that time, then it's worth getting into. If it stays red and mostly sell volume, it's foolish to get into it. And the S&P 500 is at the 127.1% level, precisely where I mapped off on Tuesday. This little level here, this is off of one of those volume nodes, like this one right here. I was playing with that the other day, and it's accurate. Don't get me wrong; it's not like the end all be all, but it is accurate. I did it here again too, and was wondering like what would be picked up or whatever. On that day, it just so happened the 261.8% level and the bottom average range coincided at the same time. And again, like I usually shoot for a statistical mean, and you can see how on that day, that major freaking wick there, I mean that one candle, let's see what the actual move was. It don't look like a lot on here, but whenever you draw it out, it is substantial. That's 80-point move in 30 minutes is what that was. But bottom average daily range got picked up. Statistical mean is what I got aimed for. And again, right now it's like at that Tuesday's level of 127.1%, which is the equivalent of -4 deviation. So that's a possible pickup point. The Canadian dollar, I really don't know. I know that. A 10-year note, what I modeled out on Tuesday, was almost right on this. The low level's almost right. It didn't aim for that. I mean, basically what happened with the 10-year, it probably stayed within 2 deviations, except for down here, that's -3 deviation. What I modeled off for wheat futures for Tuesday, that one was a mess. It wasn't neither overbought or oversold. It was at the statistical mean. It aimed back for the statistical mean. It didn't quite get there. It went for my 100% level, the higher one, and rejected from there. And we'll look for a statistical mean. More than likely. That's not no guarantee. It's just what happens quite often. The dollar is technically trading where it above where it's supposed to be. What I modeled off, I do different modeling on the dollar. It's just basically based between the top and bottom average daily range is all that's based off of. And if it wants to do like a double top or something, then that's all fine and well. That's kind of what you're into now. And you're above where you're supposed to be, so it can technically this can drop on a statistical basis. I don't mean it will. And just statistically, I didn't actually do oats for Tuesday. I passed that. Live cattle futures. This thing's been freaking on point sometimes. What I modeled off for the potential rejection point of profit taking was correct. Again, like a statistical mean level or prior high level that can be picked up, rejected off the top of average daily range, and almost came down to the prior week's statistical mean and this week's lower level that many algorithms pick up, and then you can see how. Well, let me do a little bit differently on here. Well, make sure I'm on the right track here. Yeah, this one here. This one here is your 127.1% level from this week. And what makes that substantial is even on the 1 minute chart, you broke above, use the top of the average daily range as support. This is a very bullish potential move that's coming in. Broke above the 127.1% level. This one here is it. Don't pay attention to that one. Broke above it, used it as support. Anytime you see like a positive forward deviation being used as some support, it may run a whole lot more. Of course, saying that at the time, I mean, you gotta let your daggone computer just run for you. Just leave like a trailing stop or something. Palladium, let me go 30 day. Let me go through these again. That one did precisely. Palladium did. No. That's last week's. Last week's higher level, that could have been resistance. That's what I used for this week. So that's not necessarily a good thing. Anyway, it shot down, went to the bottom of average daily range, got some support there, traveled back up to the statistical mean. Earlier in the week, I think it was Sunday night or something, I just for giggles, I was looking at Platinum, and I'm like, holy crap, Platinum has potential to freaking move, man. Platinum had 650 points that it could have potentially done a 40% total move on the week if it wanted to, if algorithms wanted to use the full spectrum of what could have been and should have been or whatever. Many times when it's high like that, it will trade somewhere in the freaking middle. By my average daily range on that Tuesday would have been a good time to purchase that, but I could get into more details. If you're looking at it, it's trying to consolidate very well there in hindsight. It's very, very, very well for potential for an upward swing. Again, statistical mean is what you're supposed to be aiming for. So even if you got into like here, then like only up to here, but that's still a good chunk of money you could have made from there to, well, whenever you got full confirmation. Let's say there, 65 points on Platinum. So 650 times 5. That's a good chunk of money. But yes, Platinum is one that I was actually like, holy crap, this thing can freaking push if it wanted to this week. But it stayed relatively, tame. It didn't go. It stayed within parameters. And Silver I was actually bullish on earlier in the week, or sometime or not. Silver did pretty perfect off what I mapped off. This prior 127.1% level and this week's 0% level or 100% level. It just depends on where you look at it. Anyway, it was at the statistical mean. It went for the prior week's statistical mean to use as potential resistance or profit taking. ATR trying to stop on 30 minute, got picked up, and then it ran up. And then there's nowhere else really to go to once you get consolidation to the lower side. It's range bound like crazy. That would suck to sit through this. But again, the statistical mean is what it aimed for. And the other day, yesterday, or whatever, yesterday morning I was bullish on silver then. It tried to wick some people out, which kind of sucked if he's in that and lost. Then I used a 30-minute time frame and then what its levels were. And that kind of, played out a little bit there. But anyway, I was bullish on it the other day. really don't know if I did this one or not. I did do it. That's for our Bob gasoline. Let me remove this one. Statistical mean level. It was below where it's supposed to be on a statistical basis, and now it's trading where barely within parameters. This is top of average daily range. This is bottom. Since we went from bottom, now it's in the top. It's harder statistically, not fundamentally. Just statistically, it's harder to get much past that. And I was bullish on crude this morning. There's a YouTuber I watch. He's like, "What's everybody actually trying to buy today or hold through the weekend or whatever?" And I said crude. the level I had mapped off on Monday for crude, which it played with that very well too. So I think that's why I left that level up. I need to go back and no. Tuesday's up here. That's what it is. Tuesday's 105.52. That's pops up 3 deviation on that. I thought it could go up to there. That's what I told that one YouTuber. I said it. Other people say, what's weird is some people are saying 105. One person said 106. And legitimately, I'm like, it's gonna be 105.50 potentially. And it wicked down there too. And that one, that wick down was based off that 30-minute node of volume. That's quite a wick. So if you're not prepared to be wicked out like that, and just randomly, whatever time that was, 6 o'clock, 5 o'clock, if not ready for that, then might hurt a little bit. Or if you're ready to be buying it up at that time. I think I don't know what all alerts I had, but anyway, and I was bullish on crude over the week, or most of the week. I was definitely like, holy crap down here, because that one came down to the 161.8% level on the week for Monday or Sunday even. That was Monday. That's whenever Trump made that tweet or whatever. And that's exactly where it was prior to all that. So that tweet took a week to pan out to get back to where it was. Well, it was dropping beforehand. It was at a statistical level Trump tweeted, which is strange to me that, Trump just happens to tweet and then it dumps like a lot in a very short period of time. But anyway, it can, continue to go up if it wants to. Just statistically. But I don't know. Heating oil, I didn't actually model it out, but this arrow here was the level for heating oil. It had potential. Let's see if I can redo all that. From here to here roughly. Statistical mean here. A prior 161.8%. Well, I have no idea what that one even is. Attempted to gain traction at the bottom average daily range, and the algorithms probably picked it up there. And it's in free market though after hours, so it's harder to tell honestly. So rejection is fine. Once you get back down to break even, whatever, you have to close out a position. And once you get into, where it's getting more bullish again, then you can go long again. But it's kind of is what it is. Technically, it's within parameters right now. And for Tuesday's level, it'd be 480. And the VIX, what I modeled off, it already tagged it. It already tagged the 127.1% level for like first thing Monday whenever Trump made that tweet. Around that time. Yeah. So made the tweet. Everything broke down. It went almost to the bottom of average daily range. That's like a massive move too on the VIX. It went for the statistical mean. You can see that how it happened. Statistical mean, statistical mean, statistical mean. Then you get freaking range bound. But I kind of figured that like after that tweet and stuff, and then like you don't know what else going to happen. And Wednesday and Thursday and stuff, I figured it since it was like the Monday's statistical mean and Tuesday's statistical mean, it wanted to hover in there. I figured the rest of the markets would be kind of hesitant or whatever too. The VIX could have actually went up to 161.8% level, $29 almost, and then made some resistance. If it did that today, that'd be more likely too that, you know, if nothing happens over the weekend, then like, you know, the markets should be fairly good, decent for Sunday market open. What else did I want to look at? I want to look at 1 year chart on here. Go back to my old study set. I can't remember if it's a J26. Okay. On the 1 year 1 day chart, the most volume node candle there was here to here. You're on a statistical basis, positive 3 deviations here, positive 4 deviations here. That would have been like 5, 6. That would have been like positive 6 deviation. On the 1 year 1 day chart though, the 10 moving average, I think that's what that one is. Yeah, the 10 moving average is holding up as support. I can see how it gets purchased up here, purchased up, purchased up, purchased up. Cancel right extension. So out of that major volume node, I don't know why that thing is still staying up there for. But on that volume node right here, statistical mean, it went up to. Let me zoom in a little bit closer. So crude is still looking pretty bullish to me overall. But on the 1 year 1 day chart, the bottom of the average daily range, or bottom of the 10 moving average is here. I got purchased up again, purchased up. And on that volume node that I just did, and it's from here to there, so anything below this would have been purchased up. Statistical mean would have been aimed for top of average daily range, rejection, some profit taking somewhere. Again, the statistical mean from all that. So from that major day where you had major action, you're staying within the statistical mean basically of that to the lower side. So many people, well, I don't like to do patterns and bull flagging because I think that's bull crap. You're on an upward trend right now currently. As soon as this becomes support, then you'll get more bullish action potentially. But you're still in a statistically you're in a bullish way right now still. But it's looking like it if I had no idea about what's going on in the world, I'd say, you know, you had that major spike, you got dumped off, you got picked back up again. It needed a pullback, quite honestly. You got that. So then, you know, like different levels get reset and stuff. And so then you can have that retest again. So retested 120 wouldn't surprise me at all. That's positive 3 deviation on the 30-minute chart also currently. So I can definitely make some resistance. Oof. I have quite a few levels modeled out on this one, don't I? Since I've done all this, I've tried to clean it up a little bit. I can't remember what another letter is. U. Let me get it 1 year, 1 day on this. Let me go to SPY. And the SPY ain't at no negative 3 deviation. You're at most modeling, most of the time, most things stay within 2 standard deviations. Two standard deviation will be there on the SPY. Let's see what the for US is. That's negative 2 deviation. Negative 3 deviation, negative 4 deviation. If you want to extrapolate it whenever that does come down there, then you'd have to go a little bit further, because probably in like 10 days or whatever, this low will be not on this chart anymore. So virtually that one was negative 2 deviation right now. Negative 2 deviation right now. So I feel good about that level there. Once it comes down to it, I'm not sure when it'll happen. I said it'd be within 10 days or so. So it'll probably be somewhere around 62.50-ish. So just basic modeling and, you know, what I think and stuff. I know the 200 moving average was a big one for a lot of people, and that didn't hold up. Which I don't know, you had buy volume here. You had about half and half buy volume there. Mostly sell. Today, nothing but sell. Yeah, I think, you know, somewhere in the vicinity of 62.50. And that's, you know, pretty basic shit. I feel pretty decent about that level. to be picked up based off of models, not based off of any geopolitical anything. But a lot of times you just gotta do something to turn that noise off. Yeah, I feel very decent about -2 deviation. Because again, like on a bell curve, most things say within 2 standard deviations. So, got my alert set. Hopefully that alert actually goes off whenever that day comes. And I'm sure, around that time, somebody will announce, yeah, we got world peace has been achieved. So, and today was brutal, man. That's like a lot of sell volume. It's just so hard to get over that much sell volume. Holy crap, on 313, that's nothing but sell volume. Yeah. So, if it wants to whipsaw back and forth like it did here, then, Sunday, Monday, be a whole bunch of buy volume. If it wants to just do the same repetitive stuff, which the markets do sometimes they don't. You've not had an actual green candle on the S&P since 225. And before that one, he was trading below the 10 moving average mostly, and rejecting off the top of the average daily range. It tested that top of the average daily range here twice in a row and rejected. So all that, shows up as being, bearish tone, of course. I guess I'm all done with this. Goodbye.